Good evening. It is time for today's Tax Talk. I'm your host. I'm attorney Stephen Leahy. It is Tuesday, Crypto Tuesday, October 18th, year of our Lord 2022. The IRS is always making rules. They're really targeting digital currencies. Now they're calling them digital assets, and that's what we're going to talk about today. Won't you join us? Okay, so it is the digital assets. I had something to say today, and I don't know what it is. But anyway, we're going to talk about this, the IRS, always about the IRS. I just watched a good special about the IRS, and I have to laugh because many of the points that were brought out by the guests talking about the IRS, things I've been saying for months. And so if you're watching this show, you know all of this about the IRS and the 87,000 agents, and they're not 87,000 employees. Okay. But many of those will be agents, and so we're all going to be faced with that. So let's go right to the story, shall we? Okay, so here's the story. But first, what we do here on Crypto Tuesday is we begin, like always, at coinflip.tech, our favorite crypto site, and looking at the markets. There was a time when looking at the crypto markets could be exciting. I even had one slide where it showed the roller coaster, right? Because it was up and down, way up, way down. Now, not so much. It's been about the same level, and for many weeks now, trading about the same level, about 19,000, goes up around 20, it comes back down to 19,000, and that's pretty much where Bitcoin is. Ethereum's not too much different, about 1,300, goes up a little bit, comes back down. If we look at the last 7 days for Bitcoin, we see just what I was saying. It's kind of trading in the same general area. It's not as volatile as it once was. Is that a good thing? I don't know if that's a good thing. There are those who would think it's a good thing because, and here's Ethereum, because volatility was one of the things that everybody complained about. Well, you can't trade Bitcoin or Ethereum because when you buy it, you have to hold on to it because it's going to go up in value. But if the value never really changes, doesn't that help the stability of the coin, and then the being able to use it for currency? Because when you get it, it's worth about as much as when you sell it. The problem is if I took Bitcoin and it was at the high end, and then the volatility when I wanted to use it was at the low end, I lost a lot of money. And so I don't want to buy Bitcoin when it's high. Don't want to buy it when it's low because I always thought it was going to go higher, right? So is it better now that it's stable? Of course, you don't hear that. But I think in the long run, stability for these cryptos is a good thing. People want to be able to predict pretty much where it is. Corn and wheat and all of those other commodities, they go up and down too, but not now and before inflation. But they're not supposed to go wildly up or down, right? So they stay within a range. And if they rise, they rise slowly. If they fall, they fall slowly. And that's the commodities. And that's if we can get that way with crypto, I think it would be a good thing. Now, if you bought it at 60 and it's at 20, you don't want it to stay at 20. I get that. I understand. Okay, so let's go to the next slide. The IRS is making it easier to file your crypto taxes. Now, we've talked about this already, but the IRS came out with a new ruling today. And so that's why they're just repeating what they kind of, because what happens with the IRS, and you know this with all government, right? They leak it out a couple months before, see what people say. And then they come out with the statement, say, oh, this is what we're doing, even though they already told you that's what they're doing. And most of the time when they tell you what they're doing, they're going to do it. They're just looking, no, sometimes there's a lot of backlash and then they don't do it. So the IRS has given U.S. cryptocurrency holders a bit more clarity about how to report digital assets in their 1040 income tax forms, a likely precursor to regulatory guidance. In 2022 tax form draft instructions released late Monday. Well, they did release them Monday, but they released a draft of the draft some time ago, and I showed them to you on this show, and we looked at it, and they renamed it so that the Internal Revenue Service expanded how taxpayers should list their crypto transactions, including switching the verbiage from virtual currency to digital assets. We talked a lot about this too because the IRS is talking about coming up with a new information return called a 1099 DA, digital asset. We talked about that on the show. They're being a little more attuned to the terminology of the industry and are being more inclusive of potential crypto transactions. The additional clarity is welcome, tax professionals said, but getting guidance is still their number one ask. In August, the IRS expanded the crypto question on the 1040 tax form to specify that taxpayers should report if they had received crypto as an award, or compensation. The latest instructions change virtual currency to digital assets, a nod to the definition of Section 6045 as amended in the 2021 infrastructure bill that expanded cryptocurrency reporting requirements. And then that's why you're getting 1099Bs now from crypto brokerage and not the 1099Ks. And it's beyond the scope of this show. Not the show, because I've talked about it, but this particular show. The change addresses ambiguity about whether a non-fungible token, or NFT, is considered a virtual currency. In an updated form, the agency explicitly says digital assets includes NFTs and virtual currencies. The change in terminology is a good sign that the agency is preparing more guidance. Head of the Government Solutions at TaxBit and a former senior counsel with the Office of Chief Counsel at the IRS. The IRS is ramping up for coalescing their terminology around this digital asset term that was in its statute, he said. So it means that it's more likely than not in the near future we're going to see these regs come up and the IRS continuing to move forward with sort of an implementation of regulatory regime, probably sooner rather than later. Well, we've seen this coming. We know that it's coming. We've talked a lot on the show about the SEC, or the Commodity Futures Trading Commission, and all of them, and the battle between those two regulatory agencies about who's going to get the lion's share of the regulation, because with that comes money. While there is no penalty for checking yes on the 1040 form, a taxpayer who underreports their income could be subject to penalties and interest of a non-reported crypto income. I have to disagree when he says there's no penalty for checking yes on the form. If it's you're signing this under penalty of perjury, and so if I say that I don't have any virtual currency, and I do, well, that would be false. And if I knew it was false, that could be perjury. So when I'm signing a tax form, I'm signing under penalty of perjury. So I have to be accurate on all of it. The elaborated forms help taxpayers get clarity to prevent that, taxpayers said. What does it say? Tax professionals said. I'm a tax professional. I didn't say that. Financial interest is further defined in the updated instruction form draft, another area where the industry was seeking guidance. Financial interests, it says, are present if you are the owner of record of a digital asset or have an ownership stake in an account that holds one or more digital assets, including the rights and obligations to acquire a financial interest, or you own a wallet that holds digital assets. They've never really defined what that meant. The definition of financial interest is what tax professionals expected, said this gentleman. so taxpayers know whether to check the box on the form. The form draft elaborates that if a taxpayer received digital assets as a result of mining, staking, or similar activities, they should check the yes box on the form. The similar activities might include decentralized finance activities, or DeFi, such as liquidity pools, said Lisa, a partner at former Treasury Tax Legislative Council. In a tax dispute, instruction forms are not binding guidance, so taxpayers may not be able to rely on it, she noted. When you think about it, as a practical matter, most everyday taxpayers rely on the instructions when they're filling out their tax forms. And so it seems kind of unfair that if they relied on something that these instructions said, and the IRS then challenged it, they wouldn't be able to point to this in court and say, this is something that I relied on. The digital asset question on the 1040 form doesn't have anything to do with substantive tax, and it is more disclosure-based, kind of a defense to the argument. Guidance or law, particularly in the area of staking and mining and the treatment of NFTs, are what industry professionals say they want the most. Trying to make sense of the instructions and changes to the form is like reading the tea leaves. To contact this reporter, and you'll see the stories in a link underneath, so you can follow this story. I want to give credit to the author, and the author is up here at the top, Erin Slowly. So I wanted to give her credit. This is the IRS page. Let's go down to the bottom here to show you. This was changed yesterday. Page last reviewed or updated October 17th. So yesterday. And so what they did is they defined digital assets. What is a digital asset? Digital assets are digital representation of value that may function as a medium of exchange, a unit of account, and or a store of value. Digital assets may include, but are not limited to. Of course, they can't limit it because things are changing every day, and they want to put as much as they can in this. Virtual currencies such as Bitcoin and Ether, stablecoins such as Tether and USD coin, non-fungible tokens. So there it is right there. Now non-fungible tokens are now part of it. In some environments, digital assets may operate like real currency. In other words, the coin and paper money of the United States or of any other country that is designated as a legal tender, but they don't have legal tender status in the U.S. Cryptocurrency is a type of digital asset that uses cryptography to validate and secure transactions that are digitally recorded on a distributed ledger, such as blockchain or any similar technology. A digital asset that is equivalent that has an equivalent value in real currency or acts as a substitute for real currency has been referred to by the IRS as convertible virtual currency. Bitcoin is one example of convertible virtual currency. Bitcoin can be digitally traded between users and can be purchased for or exchanged into US dollars, euros, and other currencies of digital assets. Tax consequences. You may owe taxes on the following transactions. I think this is interesting, so I'm just going to go through it quickly. Sale of digital asset. Exchange of digital assets for property, goods, or services. Exchange of trade or trade of one digital asset for another. Receipt of a digital asset as payment for goods or services. Receipt of a new digital asset as a result of mining or staking activities. Receipt of a digital asset as a result of an airdrop. Use of digital assets to pay for goods and services. Any other disposition of a financial interest in a digital asset. Receipt or transfer of digital asset for free without providing any consideration. That does not qualify as a bona fide gift. You may owe tax, but again, it's always been on the sale. So receiving assets, there shouldn't be a tax consequence. The tax consequence comes when I get rid of it through trade or purchase or taxing. That's when there's a taxing consequence. But here they're listing many more. So then they have some guides. But it's interesting that the IRS is it takes them many years to get up to speed, and by the time they get up to speed, the market's way past them. But they still have to keep trying to play catch up, and they do. And again, they need the IRS is coming after them, and all of these other regulatory agencies are coming after digital currencies and digital assets. And so expect more of that. That's what's going to happen. So thanks so much for watching. I want to ask you to like and subscribe. Like and subscribe. We need your help. We need to get this content out so others see it. Remember, the core of almost all news is tax news, and that's what we cover here first. So thanks so much for joining us. Remember, if you have a tax problem and you need some help, the first thing you should do is get a copy of my book, Deal with Your IRS Problem Today. Go to freeirsbook.com. That's freeirsbook.com. We will pay for the printing if you pay for the shipping and handling. So go to freeirsbook.com, get your free copy. So thanks so much for joining us here today. We look forward to seeing you here tomorrow. If you have any questions, call me, 312-664-6649. Thanks so much for watching, and we'll see you on another time. Out.